I'm Danielle Hale, Chief Economist at Realtor.com. As vacation season wraps up and school buses and pumpkin spice reappear, here's what you need to know. The Fed did not cut its policy rate in July, but weaker than expected July jobs data, followed by moderating inflation and downward revisions to this year's job figures, all set the stage for a September rate reduction. In his address to economists in August, in Jackson Hole, Chair Powell gave the clearest indication yet that Fed rate cuts are on the horizon, but maintained that the timing and pace will depend on the data. With another job and inflation reading to go before the Fed's September decision, the size of the rate cut could change, but the market currently expects just a quarter of a point. A half-point reduction is possible, but not my base case. Even so, mortgage rates have dipped to the mid-6% range, helping to shore up buyer purchasing power that had eroded as rates surged. These rates aren't low enough to erase the mortgage rate lock-in effect, as 86% of borrowers still have a sub-6% rate, but they're a start, and the Realtor.com housing forecast expects them to go lower. At the same time, falling mortgage rates haven't yet boosted buyer sentiment, and consumers are split on the direction for mortgage rates in the year ahead. Only a minority of consumers said it was a good time to buy a home, perhaps reflecting Realtor.com economist Jiayi Xu's finding that renting is more affordable than buying a starter home in all 50 markets reviewed in July. Joel Berner found that builders are aware of these trends and throttled back, with both single-family and multifamily starts and permits down in July. But sales of existing homes stabilized, albeit at a low level. Growing inventories, which reached a 5-year high, according to Ralph McLaughlin and the Realtor.com July Housing Trends Report, are helping to usher in more balance in housing. Even though the number of homes for sale trails 2017 to 2019 levels by 30%, the slower pace of sales, even after a bit of a July bounce, means less frenzy than would otherwise be expected at these counts. Still, real estate is local and the heat is on in some markets. The recent Realtor.com How to Zip Codes report by Hannah Jones reveals that affordable markets continue to attract outside homebuyer and investor attention, which helped push repeat zip 43230 in Gahanna, Ohio to the top of the list. Similarly, Jiayi Xu found that a mix of southern and midwestern markets topped the Realtor.com list of popular markets, areas that draw buyers in and, importantly, also hold on to existing residents. You'll find all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates.